How's it going, everyone? Today, I have to talk about the recent disaster in the crypto market. Uh, you know, I had a lot of calls in the past few weeks. I've been doing a lot of land deals, just unique deals for my clients that are doing really well, offering 17, 20, in some cases, 30% returns. And I've had a few client calls in the past few weeks where my clients had told me that, Tom, I want to take my money out. It's been great, but I'm going to put my money in crypto, whether it be Dogecoin or Ethereum or Bitcoin. And I really had to break it down for them as to what the potential upside might look like, and not even factoring into the equation risk or volatility. And when you have markets like the crypto that are really, they're kind of unfounded right now as to what they actually produce. Not to say that they don't produce anything or that they won't, but today it's kind of all conceptual. And a lot of the buying is being done on momentum or hearsay. It provides a risky asset class, if you want to call it an asset class. And I'm actually in the camp of believing that you should own some crypto in your portfolio. There's a great researcher from ARK Invest actually who talks about what is the optimal amount of crypto that you should own it in your portfolio. Now, their research talks about Bitcoin, okay? And there's something called the Sharpe ratio. The Sharpe ratio is a measurement that helps you understand the balance between risk and return, right? You don't want to have a ton of risk for a decent amount of return. You ultimately want to have the lowest amount of risk for the highest amount of return. And so when they did the research, they determined that if Bitcoin ends up being a $5 trillion market, which would put the per coin price at around 150 to 170, then you should have no more than 7% of your portfolio in that asset class. Now, I've been telling my clients, look, if you're going to be in the crypto game, I love the idea of owning Coinbase. It has exposure to all of the currencies. And if other currencies from the government or other governments decide to trade in the U.S. stock market or the U.S. crypto market, it's going to probably be using Coinbase, okay? So that's the first thing. You shouldn't have more than 7% in your portfolio. Well, a lot of my clients were taking their capital and putting it all into some of these cryptos, these new ones, right? Well, obviously the volatility existed, Elon Musk and the SNL skits, and just a variety of other issues have caused fear in crypto. Now you have Bitcoin at $43,000 a coin. So what I've been telling my clients to do is really think about the amount of volatility relative to the upside. And, I've been warning them. I broke it down for them. We did the math and I asked them, what amount of return do you think you'll get from crypto? Some of them are saying 30, 40% annually. Great. So we did the math and I calculated for them over a 5-year period what that might look like. And in the best case scenario, what you're looking at in terms of what is known as a CAGR, or a cumulative annual or compound annual growth rate, it's kind of just the average of all the growth over the course of time. It's around a 20 to 24% annual rate. Now, if you have that as an option, or you have something like private money lending, for example, at 17% as an option, but with 1/4 of volatility, you're giving up 5 to 7 percentage points per year to avoid all that risk. Well, fast forward to today, my clients in the past week or two are down 30% right now in their crypto. Now, they better hope that it goes back up or take their losses now and reinvest. And again, this is kind of the situation that we're in. I was at a brewery yesterday having a drink, and as I was in line, there was this punk rocker guy behind the brewery serving the beers, and he was talking about Dogecoin. Now, when you have someone who has likely never traded a stock in his life, has no idea about the crypto market, when he's buying into the trend, to me, that is the most clear tell sign that there is a trend momentum bubble forming. And then a lot of people don't understand the underlying value or concepts or price points of these so-called assets. And again, I sold at around $60,000 for the Bitcoin. I'll probably buy back in at 40,000, making up about 7% of my portfolio. But I've been telling my clients, you got to have stable ways to make money. And if you watch any of my videos, I believe in this. stable, solid returns. Like for example, I have I did recommend some tech stocks as of late that have taken a bath for a number of reasons: cap gains, treasury yields, the cost of capital structures. There's a lot of reasons why they're taking a bath right now. But if you do what I do and you use the dollar cost averaging, which again, 3 months ago I talked about that, you're setting up frequent purchases at the same amount over time, right? Microsoft, for example, down, quite a bit in the last few weeks. That company is phenomenal. They're the category leader in a number of technologies, a number of segments. I'm buying into that every time or every 2 weeks. Apple, same thing. Amazon, which by the way, on the productivity curve, once a company hits 15% of that category, that's the point of essentially the point of critical mass. Amazon only is penetrated globally at 15% of the e-commerce market. So again, I'm buying into Amazon thinking that they're going to hit that acceleration and really start growing here in the next 5 to 10 years. And so I'm buying stable companies that I believe in their growth trajectory. I'm doing it over a dollar cost averaging method. I'm putting my money as well in stable income producing categories such as private money lending, such as land development deals. We have one right now offering a 30% return to investors. Now, again, it's land and it's in the city of Austin, a very attractive market. So am I going to do that? Or am I going to take a total gamble and go out there and trade options or trade, Bitcoin? And so I just want to put this out there for you all because while I do believe that you should have some crypto in your portfolio due to something called cross correlation risk, that's really why you want it in there. And I do believe it will become a substantial market long term. But there's just so many headwinds, I think, right now for that, such as what they're calling blood mining. Most coins are mined in China. Well, that's going to eventually, there will be a compliance board that manages where the mining's happening. It's not eco-friendly. It's very wasteful. So we know that. And the fact that governments are looking to build their own coins. If governments build their own coins, why would they let other coins in the marketplace? They're going to want you to use their coin. Well, the US is looking at their own coin. We just had an article in The Economist that talks about what is gov coins. Government's going to be producing these coins. So you can expect regulation coming for these coins. As well as now the IRS is going to be taxing the gains of these, right? So you have a lot of headwinds right now, right? It's not a free market as much as it was just a bit ago. So do consider the implications of the risk, of the volatility, of the compliance, of the blood mining that are facing the crypto market. And again, make sure you're investing with stable and sound investments. So with that, I'd be curious to get your thoughts. I would love to know what you're thinking, and give it a thumbs up. Thanks all.